Hey everyone, good afternoon. My name is Steve Federal, Managing Partner at FXESTrader.com, and welcome to the Wednesday, sort of midday break, if you will, post-lunchtime New York webinar here. Today's the 27th of August, 2014, and I will be your host for approximately the next hour. I wanted to go ahead and start a little bit after the time to give everybody a chance to get signed on and so forth. I know that markets have been quite dead lately, at least as far as the folks trading the U.S. indices. So it's usually a good time maybe take a break, get a little refresher. I'm going to talk today on a probably a much different subject than maybe many of you have seen. And the theme or the important thing to gain today is really learning how to read order flow. I think that in the very end of the day, if you look at all the most successful traders around the world, all the hot indicators and all the stuff that seems to get pitched out there in market land as far as software and so forth. At the end of the day, as far as fine-tuning, you really need to, and actually while I'm on the subject, if you guys, if we could please, can we just get a quick sound and screen check too? So I can maybe have a few folks that may not be able to hear me. So if everybody can hear me, just put in a yes, if you could, please. That would be great. Make sure we're broadcasting here. But just to continue on, one of the most important things as far as the when to trade off and talk about this is learning how to read order flow. And really the key thing is that in order to be able to read order flow effectively, you have to have the right tools to be able to analyze it. I far prefer to read order flow in a much different format using the market delta footprint chart. So hence the title of our webinar today, why some traders who use the market delta footprint chart correctly are printing money and how you can too. And quite frankly, the folks that really know how to read this and use the order imbalance indicator associated with this, and maybe the brand new indicator as well, the non-confirming other markets, highs or lows indicator. It's an excellent tool for being able to read order flow, guys. So before we get into this, let me just minimize this out, go through the normal disclaimer disclosure. And, you know, you guys, this is really for educational purposes, okay? The risk of loss in trading futures, commodities can be substantial. So you should therefore consider whether or not such trading is suitable for you in light of your financial condition. So, you know, just to get that out. But if you guys want just a quick poke through on my website, this is the site. You guys don't know who I am. Been around the trading game for about 7 years in the futures markets. Had a number of folks come to me over the course of the last few years. Of course, of the last few years, but the I think the problem is that most of the mentors out there are not setting and training folks up correctly. They're not helping them truly cut the learning curve. So I think that what's important is if you guys are going to find a mentor to help you trade, you better be able to vet them out. And the key thing I have, you know, as far as testimonials on us, you guys can certainly click on this or click on the who we are. You can take a look at my LinkedIn profile. You can even go to our YouTube page. Most of the stuff you'll see up on our YouTube channel focuses on the footprint. We've had well over 11,000 views of our videos and tons of good feedback on how I teach this, which is probably much different than most. I know a lot of people really aren't teaching specifically order flow and the broad themes of market profile, but it's important to, so just out of curiosity, it looks like some of you guys can hear me and some of you can't. Is that correct? Maybe if our, so we're okay now? Getting a lot of people privately PMing me, telling me that they can or can't. So I just want to make sure this is not a broad problem. Okay, looks like most of you guys can hear me. So for those of you who can't hear, the problem's on your end. So in any case, this is the YouTube channel. You guys could, I highly encourage beyond this webinar that you look at some of these videos, okay? They all really are pretty good. You're not going to get how to read the footprint in an hour or 2 hour session. There are so many nuances that go along with learning how to read the footprint. It just absolutely has to be a screen time type of thing. But I feel the way that it's laid out with the footprint is one of the best out there. So, and I know I got a lot of questions about the course class coming up. I'll talk about this towards the end, guys. Do keep in mind, if you guys could have some flexibility with the folks that are sending emails about this course. I'm looking to start it next Tuesday, but unfortunately my mother was admitted to the hospital 2 days ago. I may have to fly back to Philadelphia to take care of some stuff. So either way, we'll get the class kicked off at some point next week, God willing, improving my mother's situation. So if you guys could just bear with me on the class, and I'll let you know about that. So let's go ahead and get into the webinar. And let me pull the PowerPoint up. So everybody should see the PowerPoint first page. Typically in any webinar, I like to start off with just an overview, okay? Some of you may already be experts on the footprint. Some of you may have never seen this tool before. In my opinion, it is one of the best things on the planet as far as a futures or an index-based traders fine-tuner. You'll often hear me refer to that in different webinars I've hosted for Mirrors Futures and Trader Kingdom and all of the different brokerage firms that I have a preferred partnership with, including Market Delta. So you can go to any of their websites or go to my site if you want to see any of the past webinars. I've done at least 6 or 7 of them on just the footprint over the last year, okay? And keep in mind, this is focusing really on the most micro part of trading, and that is the when to trade, okay? So if it's not obvious, we'll go through real quickly the benefits of a bid-ask footprint, okay? Why it's important to understand how it tracks order flow, which is really everything in most top traders' opinions. Order flow. We'll also go through some chart examples, okay? Some of the stuff is within the last year, from a couple years ago. I really want to take, both the good and the bad as far as examples and show you guys that this is not a perfect science. There are a fair amount of nuances related to understanding how to read this footprint. Okay, but I'll go through a live chart example from today as well. So what trades were taken, if we took any. Keep in mind it is a holiday week. We have had a complete rip back up to new highs, just under 2,000 on the ES September contract, off of a big 1894 Globex cut way down at the bottom, and it's been straight up since on low volume pre-holiday trading. So there is really not much historically that can be read into that type of lift that we've seen, which is, in my opinion, a very low volume levitation that's taken place off of the bottom, okay? A lot of incomplete auctions to have attend, and a lot of caps to fall all the way below. So we'll certainly see if this rally is for real, in my opinion, when all the big traders get back in their desks starting in the beginning of September when everybody's finished vacation. So again, just looking through the trend day on the 8th of July, if we have time. But keep in mind through all of this, the goal, most importantly, while observing the footprint, is to determine whether or not trading activity is drying up, it's being facilitated, or it's increasing in pace at one form of price extreme or another. Okay, so as far as the examples I'll be able to show you guys, I can't see how that's worth the last 5 days. It's going to be difficult, but the volume imbalance indicator can be your own built-in algo in helping you understand imbalances to either the buy or sell side. And then sort of a bonus down here, as you guys may have already gotten the homework, the prep sheet, we'll talk about the 6 steps to consistent profitability, okay? So let's just go ahead and get down to this real quick. Just going to breeze through this. Benefits of a bid-ask footprint, if you're not already familiar with some of this stuff, is it tracks order flow, okay? Creates unprecedented accuracy and it's very transparent. You can use it on any chart type. I prefer the 5 PNF reversal. We'll go through that, okay? One of the most important things is you can execute with greater precision. Again, reading order flow, timing your entries and exits with greater precision, tracking volume with price to produce a multi-dimensional display. Gain confidence, okay? Doesn't need to be explained any more than understanding how to read order flow correctly and utilizing it correctly. You will gain confidence in trading. It also filters the noise. So see inside the bar for clues to whether we have a strengthening or a weakening order flow. Now I'll show you at least some okay examples of that today. Today and the last couple of days have been really quite poor as far as examples of this stuff. But so transparency leads to better trading, in my opinion. So just going into, and by the way, if you guys want any of these slides, if you have any questions as we go through this today, just type it in the window. But type the questions to everybody. So don't just PM me. Let everybody in the audience see what the question is. If it's something that's related to tech, you can have the team address it. But if it's anything related to the footprint of the whole or our course that we're going to be running our class, a little mini class next week, I'll answer those questions at the end. But ask it while it's fresh in your head. So moving on, order flow. Okay, everybody has a different opinion of this, but in our opinion, we feel order flow analysis is really the missing link for a lot of traders. I mean, it is not difficult to take all the different types of indicators and chart types and patterns and Fibonacci retracements and waves and all the different geometric and technical analysis on a chart and figure out where all the support and resistance zones are. It's not difficult to find where all the high and low volume nodes of a particular contract volume is, given how many days it may have traded in that particular range. Yes, obviously in new highs right now we don't have much to go on from the standpoint of accumulated volume in any kind of composite, but all in all, analyzing most futures contracts or currencies, it's not difficult to find where the support and resistance levels are, or the severity, if you will, of those support and resistance. What is difficult to do is once you get to those levels, if in fact there is going to be some sort of rejection or any kind of response to selling or buying in these areas, how to spot that in terms of order flow, okay? So, whether executing at the offer or on the bid, I think that it's important that you can assess order flow in real time and determine, whether it's being facilitated in any given direction. So as a key concept of option market theory, in order flow patterns, as revealed by the footprint chart, we're really not looking at traditional price patterns. Rather, these are time and sales patterns, okay? But it's different than just the traditional time and sales window where data is just simply ripping through too fast to comprehend, and then you have no way to see what's going on. The other beauty of the footprint, we'll get more detailed into this, is that you can actually see where the aggressive trade takes place in each tick, on each price, total buy versus sell, okay? There's a lot more that you can glean from that kind of data than just looking at a dome where most of the orders, well over 70% of them, are flashed off and on the screen by various high-frequency systems depending on the time of the day or even the day of the week. So, rather than getting the type of time and sales or the type of order information that is distracting, it's not showing true aggressive trade because it's just flashing on and off the screen. The footprint actually shows you where the aggressive trade takes place. You can glean a lot more from that from the standpoint of order flow. So the market delta footprint diverges radically from these traditional price patterns and indicators. So the cool thing I love about this is there's no attempt made to oversimplify or undersimplify. Nor is the footprint a red light, green light type system. So it's not a buy sell. It's just a hint. Okay, it's not a ring the bell at the top or bottom of the market or some particular top or bottom of a balance area that, hey, maybe things are going to be rotational today and we're going to go up, rotate back down to another given value area. So what you can tell from it is how heavy is the offer being lifted or how hard is the bid being hit at a given price point. So as I mentioned before, market profiles, support and resistance analysis, trend lines, all that other macro type big picture technical analysis teaches us where to trade, right? But the actual footprint can show us when to trade because of the way it represents order flow and volume. So that's kind of what I want to get you guys sort of in the practice of thinking about it this way, okay? So what is delta, okay? Delta is really just a term we use to describe the net difference between the buying and selling entering the market. It's actually calculated by subtracting the volume transacted at the bid price and the volume transacted at the ask price. But by definition, market delta considers trades that occur at the ask price to be trades initiated by aggressive buyers, okay? Whether it's a buy to open position or a selling of a short to close by purchasing, okay? The trades that occur at the bid price are considered to be initiated by aggressive sellers, okay? Again, we don't know if somebody that's long that has to sell or vice versa, but the accumulation of that net or positive effect on delta can reflect a more aggressive buying as a result of either motivated buyers lifting gas and then the opposite of selling. So whereas a negative delta would reflect more aggressive selling as a result of motivated sellers hitting the bid. So the footprint chart contains all price and volume data and logically organizes the trading data so traders can see inside the chart, which allows them to, see patterns, any type, see how orders are impacting price, gauging the tendency of market will continue in a direction, have an intra-bar view of price and volume data at the most intimate level, okay? So have better, more complete information, which is due to inside the bar information. So 99% of traders worldwide are only looking at the open, high, low, close, or some metric that dices that up, like in that respect, and they're not, points of control. So they're not really looking at what's going on as far as, how has net delta affected price? Is the delta positive, but yet we're up 4 points for the day? Or look at the opposite. We've actually seen periods of time throughout the summer where the delta has been negative, yet the ES is still up a couple points for the day. Okay. And keep in mind, I'm going to speak in terms of the S&P 500 mini contract during this discussion because, in my opinion, it's the best to learn on. It is one of the most tax-efficient short-term trading vehicles if you're a U.S. resident. It is also one of the most liquid and largest recognized futures index to trade, and in my opinion, to learn on the way we teach our students. So, there's a lot of other stuff out there, guys, and as many of you know, I'm not necessarily a fan of Forex because it does not give you those tax advantages that futures does, just quite simply. Plus, being a volume, time, and price-based traders here at FXEF, we rely on 3 areas of analysis in addition to auction market theory of those areas, whereas trading Forex is very decentralized. You can't get an accurate single volume on a particular price point over whatever period of time that in the past that you're, going to measure, so forth. So, and by the way, the YouTube, just to address that, the YouTube, you can link off our homepage, scroll all the way down to the bottom, just so you know. You can also get there through the webinar-based tab at the top of the page, too. So, getting, most importantly, this question I get the most, okay? Steve, this is all great. How do I put all this together and develop some mechanical process of observation, okay? So price extremes, this is the first one. As price trends and rotates, pay attention to the edges of the footprint. I can't tell you how many times you should read that first line, this first sentence right here, and just ingrain it into your head. Because most of the information coming off of the footprint, it doesn't matter. All it matters is that if we're in a trending market or in a rotational means you're just sort of, you're ping-ponging between a high and a low, okay, in some sort of balance area, pay attention to the edges, okay? If you were looking for light and dark boxes in the actual volume numbers, pay attention to the colors. Is it strong green for buying? Is it stronger, darker red for selling? Okay. So, and again, I think it'd probably be helpful for you guys if maybe you can get the slides for this. I think that and keep in mind this is also this webinar is sort of evolved, if you will, from many of these market delta webinars that I've done, because I think this page is one of the most important because you really have to develop, if you're going to use market delta, you have to develop a mechanical process of observation. So that's kind of why I put this together. So if the market is trending, all right, you'll see this when we go live, the dark blue boxes at the top of the range imply heavy volume. So maybe I'll hold this slide next to my software when we jump in and take a look at what's going on live, okay? So dark blue boxes at the top of range imply heavy volume resulting from buyers being aggressive in buying the offer and likelihood of continuation. whereas dark red boxes at the bottom of the range, of a range, keep in mind we're going to be looking at a 5 PNF reversal chart here, imply heavy volume resulting from sellers being aggressive and selling the bid in likelihood of continuation, okay? So the light colored boxes at the extremes imply less conviction, whether that's a possible reversal in trend based upon, order flow drying up, we'll be able to have a better feel for that, okay? But keep in mind this, we have, over the course of the last 4+ years in this ridiculous global central bank equity market levitation up on low volume historically, not a lot of participation, we have had a significant, literally period of time where large dips have been bought. So some of the information inside the footprint, especially in this unprecedented level of global equity market value levitation by these banks, in terms of injecting capital in the primary dealer account, it's been a little more difficult reading the footprint to see this. But I mean, let's face it, anytime there's been any significant amount of dips other than past that, you literally can see in the footprint when the big players start to come in. I don't have a lot of good examples of that to show the last couple of days. Keep in mind that the market delta footprint chart is fed by tick data, okay? And most people, in order at least to keep the market delta platform clean, don't run more than maybe 2 or 3 days past the tick data. It just clogs the database up too much, in my opinion. I keep it pretty clean, so I can only go back just today and see what the tick data is. From a system resources standpoint, I just choose not to have that thing packed full of tick data. But you can reset those numbers and look back and see, what's transpired at these important, these important edges, of these important resistance zones that you've identified. So if the market's rotating, it's especially important to pay attention only at the extremes of that given balance area, hitting a potential high, rotating back down or moving down to a potential low. We have spent an inordinate amount of time, especially this year, of some selling that takes place in the morning, obviously New York time, 9:30 market opens, and then literally grinding up all day, okay? That's been the mantra of many days and a very prominent pattern this year. It has also been very prominent to us form some sort of P or a quick buying tail literally right off the open, like an open drive that takes us up into a given area, and then we spent the rest of this day in many, many cases this year just literally balancing around at the top of this, forming the top of a P shape, okay? Again, a discussion for a different period of time, so I think it's critical if the market's rotating, even though those rotations may only be 2 or 3 points, which we've seen a lot of recently. The market's been very boring to trade on this whole rally, unless you literally came in and had no trading plan, saw some selling and got long and just rode it up every day, which is not a trading plan, guys, okay? So it's been real important to pay attention to the extremes, that even though we may have been in the tightest rotation, okay, you're looking for confirmation of a reversal in the extreme. It does not always show itself. So you've got to look for the volume numbers to be smaller, showing less and less orders going off, less conviction at the extreme. And as you'll see when I show you live, it's always cool when you see a sell imbalance with a red color pop up, okay? Doesn't necessarily mean that the market hit that edge and that we're going all the way back down to some lower level in the potential rotation down. It just means that at that particular price point, the order flow had an imbalance to the sell side. I still think that even though it's not a buy or sell signal, it is a nice hint. So if you can see multiple hints hitting at the top of this given area or the bottom, that's all you need to give you just a little bit of an edge. Remember, that's all we're looking for, just a little bit of an edge to take the trade. So, again, keep the questions coming. A lot of these questions that I get, do me a favor if you guys will, please. Table any question about using the footprint to set stop, okay, because there is a whole bunch of but ifs, and there's another hour easily in teaching you guys to use the footprint to set stops, but you absolutely can use the footprint to set targets. So whether it be a target down at some big higher low volume nodes, previous POC, some naked-based volume POC that's still developing. I mean, there's a number of ways you can utilize the footprint, which is what we teach folks in our class. So, but you can certainly use it to place stops, which we spend an inordinate amount of time, you know, bouncing against some high, which has been very frequent these last couple of months. You can also utilize the footprint, which I didn't really note in any of this, but you can also utilize the footprint to kind of see where maybe energy is building. You know, the market loves to just barbecue the shorts these days. So anytime you have some certain top that keeps getting bounced against or pushed up against, you know, you can just bet your lucky stars that there's a whole bunch of stops piling up above there, and you can actually see buy and balance orders hit once we break through those levels to the upside. You know, thus potentially keeping you off the trade depending upon the size of this break. But at the biggest level, guys, what you want to get yourself in the habit of using the footprint is that it can give you a clue or a hint as to whether or not other time frame players are coming in the market, okay? We have not seen, in my opinion, the existence of a lot of the largest time frame players, which we typically don't see in August and July anyway, but we just haven't seen a lot of these guys. But there absolutely has been times, you know, maybe outside of summer trading, that, you know, you really want to use the footprint to keep you out of the way to the freight train, so you're not stepping in front of it, okay? And you're seeing that, hey, you know, the market's just continuing to lift and seek value higher as we have sought ever since the correction. So, yeah, just getting a little bit off on a tangent here, but I think it's important to look at the big picture is that, you know, we believe in option market theory very strong at this company, but, you know, understanding how to frame the market from the perspective of both a high and I should say a higher time frame and a lower time frame gives you hints as to whether these big players are in the market. And these guys can wreck your account. So especially if you're stepping in front of the freight train, you got to know where these guys are. So let's go to the next slide. And is there anything else I want to say here? Probably is another hour I could talk on this, but go into some examples, okay? Not necessarily taken, you know, for any real, you know, why this time, why that. I mean, it's just to show you guys a little bit of a taste, not only why I prefer the 5 PNF, okay, and also, so take just a quick minute. I'm going to take a sip of water here, and take a quick minute, take a gander on this, maybe read some of this stuff here, understand why we had the sell imbalance here. You know, really a drying up of order flow going off at the top here. 2 sell-side imbalances really weren't the largest in size here. You know, recently we've had much greater sell-side imbalances towards the top. You also have to pay attention to the time frame of how these bars print. So I often get questions as to why I use point and figure. If you look at a lot of the top traders that use order flow, guys like Anthony Drager, who's actually a good guy who teaches market delta footprint as well, and some of the other guys out there. The advantage to the point and figure charting technique used in technical analysis is that you're not plotting price against time as all their techniques do. So you're plotting price against changes in direction by plotting a column of X, Y, Z, okay? So it's plotting price against changes. What I love about this is that, you know, especially in the case of, you know, down at the very micro level, the case of a 5 PNF reversal, if we can't retrace a particular move by 5 ticks, that tells you a lot about the power of the move. Yeah, we could be just chopping around, which is most of what you see on the footprint in an average trading day. But look at the power of the move from, what do we, about 1699.75 here, all the way down, okay? I'm not going to grab the pen here on WebEx because something, actually, no, let me just try it. Getting rid of this pen is kind of a pain, so let me just switch over to the pencil. Show you guys what I'm talking about here. Okay, so hopefully everybody can see this as a diagonal relationship thing. That's how these buy and sell imbalance indicators, they compare the previous, I should say in this particular case, the top box or top brackets box, this little single tick. It's comparing the order flow against the, just like it does on the dome, okay? So in this case, there's two sell-side imbalances formed. If you look down at the bottom here, they actually have a much more significant size buy side. And really all you're looking for, in this particular case, we were trending down. It's the sell-side imbalances are hints. Again, it's not a perfect science, although it can certainly be at times and certainly at big levels. So I don't think it was a surprise. In this particular case, it's one of the first shots, by the way, we made up against 1700. So typically century mark when they get hit, at least as far as the ES and the NQ contracts are concerned, is usually a pullback off, especially if it's a first-time shot up against a big area usually. But this helps you confirm it. Okay, even though you may not have felt comfortable taking the short here, look at the size of the sell-side imbalance that came up against the next time. Okay, want to look for something that's over a 5-to-1 ratio. Okay, and that's not risk reward. It's just a 5-to-1 of a buy versus the sell imbalance. In this particular case, we had almost a 10-to-1. I mean, obviously, the bigger the number of imbalance, the more I love it, right? So, but as we come up and we're printing another bar, maybe you're one of those guys that is newer to the footprint, you want to use it to execute, but you want to sort of wait for confirmation. Doesn't always come, but in this particular case, it did. We had no order flow going off against the top. So, whether you got filled on the trade at 1700 or you got filled maybe a couple of ticks below it, the point is that you at this particular point were relatively comfortable that there was no orders, or I should say the offers to be lifted above 1700. So as you took a short against that, you're really essentially looking for what happened to take place. So we had a pretty decent pullback, dropped 6 points off that level. But also one cool thing I love about the footprint chart is you're in many cases also looking for incomplete auctions. Anytime you have a 0 by something or a something by 0 at the top or bottom of those bars, let's say we retrace 5 ticks and we start reprinting a new bar, that's an incomplete auction, guys. Okay, that can act as a magnet. So when we got down to here, and certainly from a scalping standpoint or taking profit targets off depending on the contract we're holding on the trade or what have you, when we got down to this level, okay, you can see that we had no buy side here, had a little bit of a retrace, okay, started printing a new bar right here, and then we moved down again to where we saw the first buy side imbalance. The folks that are correctly reading this are saying, well, hey, there's an incomplete auction right here, okay? Maybe that'll act as a magnet. So, again, if you're in scalp mode or you miss this particular trade, I'd say don't get short in the hole here, but certainly a retrace back up to 96 in this particular case may offer a good entry as well. And sure enough, not only did we complete the auction, maybe acted as a little magnet, but look at the size of the sell imbalance that's built up as well. So even if you had sort of gotten maybe by definition short or whether you missed the trade, you had another opportunity to get on it. So you couldn't have written it down for essentially 4 points, perfect execution, 3 points, whatever. The point is that the footprint showed you what to look for, okay? Got a couple of shots at this. Again, I probably, after seeing this with the number of buy sides show, I don't have the volume TOC like I do now, which is the yellow line on this chart, but seeing, numbers lift a little bit, I'd probably be less hesitant to take that trade. I'd want to see some sort of big retrace. And I still think that at the time we had taken that short, this is actually a great trade in the room. Wrote this down all day and then we got short again. Looking at, this incomplete auction that was showing up here, you're going to be on alert for that, hey, there's a chance we may get back up to this area again. So let's be on high alert. And sure enough, we got close. Arguably, you would have had to gotten in this trade early. I understand that. But we took a crack at this again, wrote it down for another 10 points. So this was a period of time that was, not the summer. This is back, 2013, beginning of 2014 here. So looking at the retrace back up to this is the kind of stuff you want to look for. Over a 10-to-1 sell side imbalance. But, once we have fallen down here, and again, we had another incomplete auction right here. So that may have, once we bounce down here, may have been a concern, and maybe we will try and go back up and take another crack at 1700. And many times in these retraces back to these century marks in a regular trading market, not some crazy summer hour thing, that we will take, another shot up against it depending upon what it was looking like. I mean, this was looking kind of trendy to me as far as potentially a trend day down off of what was called an open rejection reverse, which was the open type, more of a market profile stuff. But hopefully you guys are kind of getting maybe a feel for this. My goal for everybody in this webinar is just to get a feel for it. I mean, it doesn't have to absolutely completely sink in. Don't put any undue pressure on yourself to sort of get this right away, because it's not the easiest thing. This is a pretty decent example of a footprint, but there's tons of stuff out there, including today in the last month. It's just been a bunch of ambiguity. I mean, it's been murky, it's been choppy, and it just hasn't really been a lot of great stuff to glean off the footprint, okay? So, these times will pass, and we will be back to a regular type of market that, actually acts normal as far as the auctioning process, and it has participants and has more volume. So, we can, maybe table the discussion, in the last couple of days. But, hopefully everybody's kind of getting it. So let's show another example. Let me just clear out the pen here. We're kind of on time frame. Looks like we've got about 42 minutes in so far. So let's try and stay close to our hour for this webinar here. Okay, this is a while back, last year. So on the 24th, we had a pretty decent liftoff, which you guys can see down here. Had a lot of volume come in, had a nice change in the net delta for the day. So let me just grab the pen here again and show you guys the bottom of this. And this is where the delta net calculations, just pay attention to the top line. Don't get caught up with the other stuff just yet. Notice when we came down here, we didn't really see any large buy-side imbalances. We saw a lot of volume come in. We saw a pretty good change in the net number, almost about 10,000 cars in what, a 5-minute bar? So that, coupled with the fact that we had some buy programs come in, see this light lime green colors prices, this is a buy program hit. And it looked like it was even kind of skipping through. And that certainly could have been on news, whatever. But the point is, this is what's called a reversal leg up pattern. This is something you want to look for. And notice every time we pulled back through a good chunk of these, we had decent buy sides hit. This is not something I want to step in front of. Yes, we did have good sell imbalances on the tops of these, but I don't think the time was right. I would have rather seen some sort of balancing out and maybe take a shot at some bigger volumes, maybe a much more amount of time spent, bouncing around in this period, maybe having some sort of developing POC jump to the top of the day, and then maybe we could stay under and head down, okay? But, we saw on the first pullback, and this is really just a big squeeze, we really had no order flow below 96. The other great thing I love about the footprint, guys, is it's totally a way to figure out the line in the sand. These line in the sands may have varying degrees of size, but you have, in almost every case, a line in the sand that you have to get through. So if you actually took a crack at a 98 short or somewhere around the top of the 97% or 98 area, you know that, heck, you're probably going to want, and depending on the contract you have, you're probably going to want to set one of your first scales off right here at 96.25. Why? Because we haven't been able to get under this level. So the footprint does a good job of, hopefully showing areas where we have, really no order flow going off at the bottom. Nobody was really hitting the offer right here. Hence the 3 in a row buy side imbalances at the bottom of this. Okay, and notice the smallest was the third stab down. So very little order flow, and then more order came in, and I don't know whether or not this was evident, because I forget the day, but whether or not this was evident of other time frame players stepping in. It certainly appeared to me down here, okay? But notice we still, this is one of those anomalies, I forget how much the market was up this day, I think it was, I don't know, 5-6 points or whatever. Notice how we went negative on the delta. So this is where it's difficult from the standpoint of a trader looking at this 5 PNF chart to be able to say, well, geez, we got, a couple of sell side imbalances hidden here. Again, we're back up just in front of the 1700 century mark. Was this our first shot at it or not? I don't remember. But just looking purely at order flow and forgetting everything else, it would appear to me once I saw these first two that I wouldn't want to short this until maybe another stab up, a possible sort of blow off or some sort of crescendo event, on the tick chart. If this had been accompanied by, some sort of plus 800 or plus 1,000 tick spike, I may have taken a shot at shorting 1,700 given some other factors. But just purely looking at order flow up here, I probably would have waited. So, literally, what I've shown you guys today is what you need to do to analyze this. You'll always need to be sort of playing scenarios out, because the best traders, in my opinion, are ones that have a tremendous amount of ability to envision what's going on in the market. Okay, based upon this, what do I see happen? Are we going to reverse? Are we going to balance around at the top? Are we have a potential rotational day back down to 1688 in this particular case? Well, I don't really see that unless we can get through this 96 line in the sand, and there really hasn't been any selling down at this area. So what do the robots do? They see that, they see the shorts overtly showing their hand, and they go back up and they just continue to barbecue them like they've been doing for 4 years. So that's kind of what this may have been a heads up, and maybe it didn't give you too many clues that another leg up was coming. But if you can correctly read it, you're really looking for sort of that blow off in both cases. So, but your first alert was the fact that we had literally just a ripping of buying hit. Every time we pulled back, we had a buy side imbalance all the way up. So it may have kept you out of trouble. Let's take a look at the next example. And this is what I like to call an exhaustion print, okay? So if you see at the top of a given move, and granted, you're seeing an example here where the sell side imbalance was not an actual indicator. So this is an old example, but still a good point to make when you see a zero by some large number. If you're trading the ES, something over 2,000 or 3,000, depending on how fast the market's moving. Provided you want, you don't want to sit on this bar all day, in which case that number is going to show a large number, but not really be a potential exhaustion. Where if it's a quick hit into a given area or a quick move, and you see a something by zero at the bottom or a zero by something at the top, that can also be another hint that maybe we've exhausted in the move. So in a perfect world, what you'll see at the top is let me just grab the pen here again. You'll see a zero by something at the top, and bad pen, where are you? There you go. So you see a zero by something at the top, and it'll be accompanied by a black or 2 or 3 black bracketed boxes underneath it, and that'll be also the volume point of control, and even possibly a sell side imbalance, which you don't really see here. But let's just come up with a perfect scenario. If I see the combination of those 3 things, this isn't always showing, but if I see that into a big area, and barring not in front of news or not related to some geopolitical event moving the market, just a normal sort of burst into an area and a quick rejection, I'm always shorting that stuff, you guys. And there's other factors that line up, but again, just purely talking about order flow. Same be the case down at the bottom. Same factors you want to see. something by zero, possible buy side imbalance down at the bottom. Maybe the market bursted down into that area and was already trending up for the day, or maybe the Globex overnight inventory was, long or short, or net long or short, and sort of was with you potential in a trend up day, but we had maybe a open rejection reverse down into a given area, saw all those factors present on the footprint, and boom, we're long. Now, obviously, seeing these factors on some sort of dip has been much more of a historical winning trade the last few years buying a dip than it is trying to sell these rips. But at some point, that's going to change. So you can't be biased one way or the other. Just let the order flow tell you what's going on. Most of the time, the order flow is not telling you anything, okay? So let's close out of this, last couple examples, see what I'm going to show here. All right. Okay, this is a little more of a modern, what I utilize today. This is how my market profile chart, my footprint chart looks today. I'll show you the profile too. This is what my footprint chart looks like today. Okay, so as we came up into a given area, obviously we spent a fair amount of time on one bar, right? Almost 40 minutes. But as we came up against the 5-tick, we, rotated, started printing a new bar. I see the size of this sell imbalance at the top, coupled with the black bracketed boxes, up against a big area, at least it was at the time, okay? I'm always willing on a retrace to see that sell, and we know that if we can get under 57 in this particular case, we may see a nice run of some stops and potential continuation pattern. We saw that. So the other thing that's the beauty of at least the 5 PNF, and you can use a 4 or 6 depending upon how you want to smooth out all the noise, but this really cuts through all the crap in terms of the noise in the market. Slower periods of time, you could have, not a 5-tick reversal, and you spend 50 minutes on one bar. I still think that can teach one a lot about, what's building up. Maybe there's some energy building one way or the other as far as movement. So in the next example, the hint here and the takeaway from this is almost purely the delta for the day. You notice we've spent a lot of time balancing up in this area between 80 and 83, but now all of a sudden, even though this is an older example, we didn't have any sell side imbalances, but we had the rollover in the net delta. That can also be a hint to a potential sort of breakthrough, which sort of appeared to me to be about an 80 to 81 line in the sand to get through. So as soon as you burst through that, you take your scales if that's in fact your trading plan. You really don't want to see down here towards 1680. You don't want to see any buy side imbalances showing up. You just want to see continuation with net delta for the day rolling over. Okay, so I'm hoping you guys are kind of getting this. Again, another great example of an incomplete auction. Look at that. This is a beautiful example, and you can find it all over the place, you guys. But see how we had a sell side, had a nice sell-off. This is actually a trade we did win, got about 5 points off this trade. But we were already on high alert that this incomplete auction may be a magnet for price. And look what happened. Boom, right up against it. Sell side imbalance, nothing going off as far as lifting the offer up there under 67. We wrote it down a little bit again. So, tell you what, let me scroll back up through here. I hope we got all these audio issues fixed from you guys. You guys got any questions on anything? Looks like we got most of our tech issues worked out. That's good. So let me just click on this. Well, and you can ask these questions publicly, guys, too. You don't have to ask them privately. The question was asked is, how powerful are these incomplete auctions? They can be real powerful, but you can also completely finish the day or the week out with them going untested. Doesn't mean they don't exist. Just use it as an additional arrow in your quiver, if you will. You always want to have in these support and resistance zones, you always want to have, 5, 6, 7 areas of confluence, whether it be high or low volume nodes. I tell you what, let me just do this. Let me jump into the software here. And, I mean, we're really dead here today, as you guys can see, but just, this is a pre-holiday trading couple of days, so no surprise, but and keep in mind, this is Market Delta's Pro version. A lot of the charts that you guys see in this, they're all custom charts, everything from my composite to the profile to all that stuff. We can get you guys the definitions for these charts depending upon, but you do need the Pro version of Market Delta to run a lot of this stuff because we've got custom trade signals and everything in here. But so you can see as we come up against 2000, and granted, it's always difficult to just start into a footprint discussion. We really kind of like to take a look at, what's going on as far as the auctioning process. But essentially, look at how many sessions we've bounced up against 2000. Okay, we could see some double TPOs on yesterday's high, trip TPOs on the Globex high. I mean, not a surprise that these incomplete and untested or poor highs need to be retested in the auction process. So I mean, I would have been looking to take a crack at some shorts up closer to 2020-50, but we had what it appeared to be a little bit of an open, even though it was an auction in range. I like to attach a hybrid to the back and maybe a little bit of a rejection reverse. This is more probably just an open auction in range. But determining that first, gives us a feel for where we're going to trade, and that's gets in a whole other subject. But just looking at the footprint, see how we can see 2 sell-side imbalances against the top. The first thing you do is look at those. Look at obviously how many bracketed boxes, and keep in mind I use over a 4-to-1. So when you look at the settings I have here, it's a 400 for the volume balance indicator. Okay, and I have a lot of other different settings in here, but the yellow lines are the POC and so forth. We got a couple of sell sides at the top, got a couple of buy sides at the bottom, and a little bit of a triangle forming, and really not much going on. Look how much time we spent on one bar, close to an hour. So again, not much to really glean from that, but at least you guys can see this trading live, and that it's been a very, do keep in mind, I'm not a big proponent of scalping, but if you guys can master this, you can absolutely scalp away on the footprint, especially if we're in what's called a ping pong type of balancing day. I don't really know that this is a great example of that, but every time we've gone up against essentially the 1999 to about the 99.50 level, we pulled back. So you can see how we did that here and again here with really nothing going off. I mean, the target among the financial media and many of the bulls has been, oh, well, we reversed off the 1894 huge LVN area, which, by the way, took place during Globex. I don't really think that was a very good auctioning, but yet we've had lifted. Everybody jumped on the bandwagon, and 2000 was the target. So I guess it became somewhat of a self-fulfilling prophecy that we were going to jam all the way to 2000 and then see what happens. There's really no surprise that a century mark touch, and I can compress this a little bit, has been met with what, 1, 2, 3 sell-side imbalances of a varying but still large degree every time we've gotten up close against that. Okay, not a big surprise. I mean, I know there's a lot we can tell from the footprint on this particular, but again, I hope that kind of answers your question. So you always want to just be on the lookout for incomplete auctions. Notice we have one here, but it's 2 p.m. New York time right now, and just not a lot of order flow going on, so forth. Let's see what else I can point out here as we scroll back. If it's a question about the class, then what I would do, guys, if you want to participate in the class, just go to this page. It's just the education page drop down. I'm hoping to start the class in a second, but class is actually a really good deal if you guys want. I shot for Mirrors Futures. I shot a webinar both. But I shot a whole class, I should say, in last September and December. They're all up on the cloud, all for on a cloud. You get access to the cloud. You can watch them on HD. There is just a ridiculous amount of material up on our cloud for our members to see. But you also get free access to the daily chart section where I go through each day, and you get access to the trading room. So you can just click into my account here and go in and look at the daily charts and be able to access that from the members page and see the reviews we do each day. It's just set up like a blog post. We'll go in and review the market. Sometimes we'll put in a much more extensive review on market rights for us once a week in the summertime. Just an update on what's going on with the market, okay? And then also a look at the composite. Oops, that's funny. Got some switchovers. So look like some of these charts came over. I actually switched some stuff around on WordPress here and look at these charts have shown up. I'll have to get the tech guys on that. But what we do is we'll take a picture of all the market, both from the profile. We'll also take a picture of the composite, which is right here, so you can know. You guys can see the zany market lift we had going on here with, just ridiculous low volume drop off. This is almost comical up here. But we do a fair amount of analysis on this. So if you guys want to participate, I like to try and keep these classes small. You guys can get in touch with me, if you have any questions about the class. I'll go to the last slide here while you guys are going through this. You guys have probably seen this before. I show this at the end of a lot of webinars. I think this is absolutely key. And our most successful students that have found varying degrees of consistent profitability in terms of size of contracts they trade, but they've all exercised the same stuff, guys. They put in major commitment. They're positive, not negative. Yes, we've heard all the stuff about trading's tough and then learn all this. Yeah, I agree with all that. But the most dedicated traders are the ones that have written complete business plans, which we can help out. We've got a bunch of examples of that stuff up on the cloud. It's about 60 or 62 different files up on the cloud that are related to everything in understanding auction market theory, the footprint, and the profile. But the key thing is being focused, being a sponge, but I also think you need to find the right mentor, somebody that can help you he or she cut the learning curve. And the key thing is to try and cut that curve by anywhere by 2/3 to 1/3. But it still requires a fair amount of screen time, guys. So, you've got to put the dedication in. And, we have on the testimonials page, if you want to poke through that, you can see there's a bunch of students in there, that have put the time and the dedication into this, and it has clicked for them. So, anybody got any questions? I want to try and keep it to an hour here. Anybody got any questions on anything? I addressed the question on incomplete auctions. We went through. I think somebody had a question on net delta, but that's calculated at the bottom of the chart. Marlene, I see you have a question, your hand raised with a question mark, but I don't see that the question was posted in. Well, if nobody has any questions, why don't we call it? Let me just switch over. So Jessica, thank you for allowing me and the folks at Darwin Agency. Michael, thanks for allowing me to participate. Hopefully this is fruitful. We'll let everybody know about the recording and the slides. If you guys want to send me an email, maybe let me know how the webinar went, what you learned. If you guys are interested in courses, classes, whatever. If you want to just send me a bio, say, hey, I've been trading this and I had this much time. I'm, looking to, maybe we can get a dialogue going. If you guys want the slides, either way, it's just steve@fxe@trader.com, or you can call my office. I'm actually going to be in the office for the next hour, too, if you guys want to give me a ring. But other than that, thanks for attending, guys, Thank you to all. Let me go ahead and stop sharing here and log out. Have a heck of a holiday weekend coming up.